Good afternoon, everybody, and welcome. My name is Anthony Kazazis, and I am the director of the NYC Network Group, as well as the NYC Real Estate Expo. And I want to thank everybody for registering for today's, or this afternoon's webinar, Creative Ways to Invest in Real Estate with Self-Directed IRAs. Our sponsor today is Next Generation Trust Company. Next Generation's mission is to provide white glove customer service, ensuring their clients have the tools and support necessary to control their financial futures by investing with self-directed retirement plans. Next Generation fulfills their mission by educating individuals and their trusted advisors about the many options and benefits of self-direction and guiding their clients through the setup and investment process. Next Generation's personalized service ensures that their clients receive the best possible experience with prompt responses to their questions and the ability to reach a live person upon calling. Most people have heard of self-directed IRAs. Now, they're often used to invest in real estate. The common assumption is that this means holding a rental property or managing a fix and flip within the IRA. But what if you don't have sufficient cash in your IRA to directly own a property, or you want a hands-off, more passive investment? Today's session will explore some creative ways you can invest in a real estate using a self-directed IRA. Our presenter today is Brittany Melville. Her designation is an SDIP. And you'll explain to us later what that means. Okay, Britt. She's the director and marketing sales of Next Generation Trust Sales. Next Generation Trust Company. Today we're gonna ask everybody to please put all your questions into the Q&A section. And if you want to say something to your friends or anything, you go also upload things to the chat section as well. So once again, without further ado, ladies and gentlemen, Brittany Melville. Brittany.
Thanks, Anthony, as always. So thanks for joining us today. We've been a part of the New York City Real Estate Expo for years. And for any of you who have been with us before, you may have heard the song and dance about self-directed IRAs. So I wanted to take a bit of a more concise approach, or a little bit more of an out-of-the-box approach to today's conversation. And it won't be very long either. So hopefully you will have some time in between sessions if you're doing back-to-back sessions. But for those who are new, I will give just a kind of high level, what is a self-directed IRA? What's the concept? Why you consider using one? And then we'll dive into some actual real examples of some pretty neat and interesting things our clients, our investors have done with their IRAs in the real estate space that you wouldn't think of as your kind of garden variety investments. So as Anthony said, I'm Brittany Melville, the Director of Marketing and Sales for Next Generation. Been with the company for about 5 years, and we're a women-owned business headquartered in northern New Jersey, so pretty accessible to the city. We've been in business for almost 20 years, and we are completely specialized in self-directed IRAs, so very passionate about sharing education on this topic with the everyday investor, but a couple groups that we are really focused on reaching these days are women in finance and millennials, the up-and-coming generation, so that they have all the tools in their arsenal to be planning effectively for financial futures and legacy building as well. So quick disclaimer, just to confirm our role, although we do work with self-directed IRAs and investors, we're not advisors or fiduciaries. So we don't endorse or recommend or sell specific investment products. We provide education around the limitations, the IRS limitations and IRS guidelines as to what, as a self-directed IRA holder, you can and cannot do with an IRA, and how the process works, and how you can be best set up for success by being fully educated and understanding the strategy. Again, educational purposes only, but if you do have specific tax or legal questions around this, we are happy to provide guidance on connecting you with the appropriate tax advisors or attorneys that can also provide more support as well. So real quick, just from a 40,000 foot view for anyone who maybe doesn't have experience with self-directed IRAs, or maybe has just heard about self-directed IRAs through word of mouth. It's essentially a retirement account that is distinguished by its ability to allow non-traditional investments. And what we mean by that is typically when we think about IRAs and using our retirement accounts to make investments, we just think stock market, stocks, bonds, mutual funds, ETFs. And we've kind of always been told and thought that that's pretty much what we're expected to do or what we can do. But for decades, the IRS technically has allowed people to use IRAs to buy private assets and do private investments. And obviously, real estate is a huge piece of that. So that's what we're talking about today. But there are many other things too within the non-traditional realm that you can do. So when we talk about self-directed IRAs, the distinguishing factors are you're not limited to publicly traded assets. You have more control over the investments you're choosing and then the decisions you're making that are driving those investments and their performance, hence the term self-directed. So you have a lot more freedom and a lot more flexibility within your retirement account to hopefully affect the return on investment. So you have a little bit more control over that return on investment you're getting. Obviously, I mean, there's been no more volatile time lately than what we've seen with everything that's going on in the market and just globally. So we know that the stock market can be very volatile, and putting all of your IRA or all your retirement dollars in that space can be unnerving and uncertain and scary for some. So this is another opportunity to potentially hedge against volatility, maybe even hedge against inflation, and we're seeing a lot of that right now, and diversifying your portfolio beyond, stocks, bonds, etc. So that's what we're talking about when we refer to a self-directed IRA, and then all these neat creative things that you can do. Obviously, we're going to talk about real estate today, but even outside of that, there's a ton of other stuff that you can do. Some of these things fall under the real estate category, or they can also overlap into other industries. But investing in startups and private companies has been very, very popular. And that includes pre-IPO companies, so like the Spotifys of the world before they went public. And then social causes, ESG, joint ventures, precious metals and cryptocurrency, international investments, private lending. So just about anything that's not publicly traded, with the exception of life insurance and collectibles, is game for consideration to be held in a self-directed IRA. And if you have a specific investment you're looking at, and you're working with a self-directed IRA company or custodian, which is, for example, what we do, you can always bring that information to your custodian, the holder of the IRA, to make a determination as to whether or not it can be held. So I'm jumping right in, and I want to talk to you. I think I have 5 examples today of some pretty interesting things that have been done in the real estate space. And this is meant to sort of get your creative juices flowing and get you to think outside the boundaries of what you would typically expect people do with self-directed IRAs, because lots of people invest in real estate, fix and flips, rental properties, etc. But that may not be for everyone. So one of the interesting things that we had come across with a client was a client found a company that runs a tree farm in Costa Rica, and they sell rights to individual trees. So in this case, the client, her IRA purchased 40 mahogany and 80 teak trees, and they mature over time, so over a period of 15 years. And then at the end of that time, the profits from the sale of those trees return to the investor's IRA. So it's just like selling off a stock or selling off an equity. You have a gain, it goes back into your IRA, you now have more cash, and now you can either reinvest it in more of these trees, you can invest it in a different type of project, you can put it back into traditional investing. You have lots of different options there. So another one, this falls into the realm of international and foreign real estate. A client who travels frequently between New York and Tel Aviv was aware through those travels of a new apartment building being built in Tel Aviv, so he felt it would be a good investment. So he instructed us to utilize his IRA funds to purchase the pre-construction unit, and then the IRA funded all the cost of building and decorating the unit, and it's now rented to a third party. So that rental income is returned to the IRA monthly. And then one disclaimer though, one caveat is due to prohibited transaction rules, because it's owned by the IRA, the client cannot stay at the apartment when he's in Tel Aviv. So he just earns rental income back to his IRA, but he's not allowed to live in that property or use that property. And that is an example of what I mentioned earlier, IRS regulations and some limitations around how you can invest with your IRA. That is one example of something that you cannot do if your IRA has ownership of real estate in any form. You're not able to directly benefit on a personal level from utilizing that property. Next example, so another example, natural gas deposits were discovered in several parts of Pennsylvania and New York. This client used his IRA to purchase rights to the gas deposits on a specific piece of property that was owned by a third party. So then the IRA, through the account administrator, contracted with a natural gas drilling company to collect the resource and then resell it, with the profits going back to the IRA. So this has become increasingly common, especially during current times and given the inflation that we're seeing, because natural resources and real assets tend to bode well during inflationary periods. So we're seeing a lot of interest in oil and gas rights. This is purely informational, but just what we have observed. And there are a lot of different ways to invest in oil and gas. You can lease or you can buy portions of it that are then leased to companies that are utilizing it, and then of course be paid on that. And of course, this doesn't require you to actively manage all of that work. That can be completely passive investment, but definitely becoming increasingly popular. So another example, I talked about private lending before. One thing that an IRA can do is it can loan money to either an entity or an individual. And they can be secured or unsecured, but most of the time we see that those loans are secured by some collateral. In this case, a loan was secured by a commercial pizza oven. Obviously, many clients use IRAs to provide loans for various projects, but in this case, the loan was actually to a pizzeria. So since the business owner was renting his location, he couldn't use the property as security for the loan. So instead, he used the commercial pizza oven as collateral and then made monthly payments back to the IRA that provided the funds at an interest rate that served them, the lender and the borrower, well. So they agreed on the terms of the note or the loan in advance, and then that IRA sent funds out and received interest and principal. And of course, they had this asset as a security. And then the last one that's more, I wouldn't say this one is as creative, but I think we're seeing a lot more self-directed IRA investors looking at this angle versus the direct acquisition of property, because it just allows for more flexibility and it's a more inclusive opportunity. So private REITs and syndications are really just a more indirect real estate investment. So typically the entity is structured as a fund or a limited partnership. The IRA invests in that entity passively, and then typically would have limited management or oversight responsibility. The fund manager or GP, general partner, does the heavy lifting. The IRA earns equity or dividends in line with its interest. So this approach can be advantageous for individuals who have limited IRA funds or want to start with a smaller dollar amount, because when utilizing a self-directed IRA, you obviously don't have to use all of your IRA funds to put into real estate or these types of private assets. You can just take a portion of what you have, and especially if you've not done this before and you wanted to start small, you could just take a small portion of your funding and put it into a project like this. Many funds have reasonable minimums these days, so they don't require a whole lot to get started, unlike investing directly in property or purchasing land directly typically need to put up quite a bit. And these days, with prices being what they are and the competition being what it is, it can be very cumbersome. So these approaches can also offer exposure to a diverse array of projects. If you're getting into a syndication or private REIT, these entities can be invested in many pieces of property, and you may have some exposure to each of those. So they're not necessarily limited to one. So I did allude to this in the examples that I just shared with you, but from a mechanical perspective, because we get these questions a lot, how essentially this works and how this works in a way that does not trigger taxes or penalties is the self-directed IRA is used as the investment vehicle through which everything flows in and out. So the account holder who's going to have the self-directed IRA established identifies an investment that they want to do. They're responsible for their due diligence. They should be comfortable assuming the risk associated with the investment. And then they go to their IRA administrator and custodian, which could be a company like Next Generation, for example, that's managing everything, and then directs them to process a transaction on behalf of the IRA. So there's obviously paperwork involved there. And then once that transaction is reviewed and processed, all the funds associated with the investment are going to be deployed out of the IRA to either an individual on the other end of the transaction or a company on the other end of the transaction. And then earnings are going to be deposited directly back into the IRA. So if there's any payment associated with that investment or any return, it's going to be sent back to the IRA's custodian in the name of that person's IRA, not to that person, not to them personally, like to their personal bank account or in their personal name. It has to be specifically titled to the IRA. And that's what enables, that closed loop system is what enables the individual to defer any capital gains or defer any tax liability on those investments that are being funneled through the IRA. And of course, in the case of a Roth IRA, which is going to earn tax-free returns, if you're using a self-directed Roth IRA and you're waiting until retirement age to take the money out, then you are not responsible for paying taxes ever on those earnings, which is a pretty powerful tool that many individuals use. But there are other types of IRAs as well that can be self-directed, including traditional tax-deferred accounts, Roth IRAs. If you are a business owner, you can establish a SEP IRA, simple IRA, a solo 401k that you can use to invest in these types of things. Or if you are a business owner and you already have a retirement plan, like a pension or profit sharing or something else for your business, you could potentially expand that to include these types of non-traditional alternative assets. So the last question is typically, if someone wanted to get this set up, what are the steps in the process and how long does it take? So conservatively, if you've never done this before, I would say, to be safe, 4 to 6 weeks is a fair timeline from literally end to end. But obviously the first step is going to be establishing a self-directed IRA if you don't already have one. So the reason that there are companies specialized in this is because if you go to your everyday, Fidelity account or your Schwab account and you ask them to invest in real estate or to invest in, private equity or whatever it is that you want to do that's not publicly traded or on their approved platform, they will probably tell you that they can't do it. But that doesn't mean that you can't do it through an IRA. It just means that you can't do it through that institution. So that's why there are companies specialized in self-directed IRAs that allow you to establish a separate account that's going to be able to handle those types of investments. So you would have to open a separate account by completing an application. That's pretty straightforward. And I mentioned earlier that there are several types of accounts that you can choose from. The second step in the process is going to be getting funds into the account, of course. And there are several ways that you can do that. If you have an existing IRA at, like I said, Fidelity or Schwab, for example, you can liquidate some or all of the funds as much as you would like to do whatever investment you're eyeing. And then the two institutions can facilitate a transfer of funds from the other custodian to your self-directed IRA's custodian. And then you'd have cash there sitting in your self-directed IRA that will be deployed for your investment. Another option is if you have an old 401k or any type of employer plan, like a 457 or 403b. If you've left an employer, and a lot of people have left employers in the past couple of years, there's been a lot of movement. If you have an inactive plan that was held through a previous employer and you haven't done anything with that yet, you could roll that plan over into a self-directed IRA so that you could start using those funds. And then, of course, lastly, as I mentioned, making an investment is going to require doing your due diligence, contacting the custodian. There's going to be paperwork that you fill out to provide a direction of investment to the custodian because they won't do anything without your authorization. It is fully self-directed, and there are no account minimums. Everything is literally driven by how much you want to invest and what you want to invest in. So once you direct your custodian and then you supply supporting documentation around the investment, we take a look at that and make sure that everything is in the name of the IRA, that it falls within IRS guidelines. And then once that review period is complete, then the funds will be sent out. So that's why I suggest this conservative timeline to get set up. And it's usually best to start having these conversations before you found an investment, especially if it's real estate related and it's a tight deadline, because we want to set you up for success and to feel confident and not stressed out about getting everything in line to get this working. But typically once someone gets set up for the first time and they kind of get an investment or two under their belt, then things tend to move a lot more smoothly and a lot more quickly for subsequent investments. So that is essentially how the process works. I didn't take a whole lot of time as I promised because I really want to leave time for questions and some discussion. So I do have here our contact information linked to the website. There are a ton of resources on the website. As Anthony said, we do lots of webinars as well on a variety of different topics. And then you can also get in touch with an individual from my team that can schedule a 30-minute session with you to do an educational session. You can check out events that are on the website. We do virtual networking on a monthly basis with like-minded individuals and people in the industry. We also have a way to text us. There's a lot you can do. Obviously, you can subscribe to newsletters, blogs, just educate yourself at a pace that works for you. But if you're in real estate or you're looking at getting into real estate, I would absolutely say that this is something you should at least know about because there's a lot of opportunity to be connected with individuals that have self-directed IRAs and have a lot of money in self-directed IRAs. And as you can see, there are lots of things that can be done with those in the real estate space. So Anthony, I see you are back. Do we want to start with our questions?
Yes, we do have some questions. We have some in the chat section and the Q&A section. First question, anonymous attendee. Can you use this program to refinance an investment property already owned?
That's a good question. Unfortunately not. If you own a property personally, it's too late to put it into an IRA. The transaction would result in a prohibited transaction. So the IRS has a list of what they deem disqualified persons, and they essentially say that if anyone with this relationship to the IRA wants to do a transaction, they can't do a transaction. So an example of it is if you have a self-directed IRA, you as a person yourself or anything that you own is disqualified from doing a transaction with your IRA. So that would be selling, buying, lending, any sort of exchange of funds in that way. So it would have to be a net new investment that you don't already have ownership of.
Thank you, Brittany. Can someone fund an IRA from an annuity account?
I have seen that done. I usually say that it sort of depends on the annuity because they tend to have more rules and restrictions and Depends on how the fees were set up as well. There may be back-end fees involved with moving funds out of that account. So I usually encourage someone who's thinking about that to contact the administrator of their annuity and see what options are available. But we can accept them, yes.
Thank you, Brittany. And okay, that was from Kurt Smith. Kim Lovejoy, what kind of legal review is typical involved on an investment agreements for the real estate and limited partnerships?
Great question, Kim. So when we do, and I want to clarify, when we do a review, we're not necessarily doing a legal review. We're doing a compliance review as an IRA custodian. So the things that we're looking at are, when we see these agreements, for example, the number one thing that we're looking at is, what is this investment? Is it something that can be held in an IRA, yes or no? So on the surface, if that answer is yes, then we're looking a level deeper. Who is involved in the investment on the paperwork? So for example, if it is a partnership agreement and we look and we see on the operating agreement that Kim Lovejoy, you already are a principal of this entity and you have 75% ownership, but you're trying to use your IRA to invest in there, we're going to see that and we're going to tell you you're not able to do that. So we would not allow that transaction to go through. So we're looking to see who is involved on the paperwork. We're looking at the terms of the investment just to see that it is within reasonable framework. And then we're also looking to see that if an IRA is going to be investing, is the IRA labeled appropriately on the documentation? So essentially the motivation behind the review is this investment, are we doing everything within our power to prevent a taxable event from happening? Because if a prohibited transaction takes place, then there are tax consequences and penalties associated with that by the IRS. So that's why we do sort of a comprehensive review. And then if there are more complex workings of a transaction, because as you can imagine, with all this sort of, with the boundaries being so wide open and all these different possibilities, people get pretty creative, which is great. But that means that like there could be something that comes across our desk tomorrow we've never seen before or heard of. And if it gets complicated and there are a lot of individuals involved and layers to this, then there are times where we may suggest passing it by an ERISA attorney. And we know of several ERISA attorneys that our clients work with on different matters. And in that case, I would say that it's certainly worth the time to have them take a look from a legal standpoint.
Very good. Kim, again, can an IRA take advantage of real estate depreciation?
So that's the one trade-off. Because you're already using a tax advantage account, you can't get sort of the double advantage. So no, it's not something that would apply in an IRA. Another example of that is we get questions a lot about 1031 exchanges. If you have a property in your self-directed IRA and you sell it and you want to buy another one, you don't have to worry about 1031 exchange rules because by nature you're already in a tax deferred account. So you don't have a time limit. You don't have, certain guidelines that you have to follow to get the tax benefit. So it is a great question, and it is something to consider if you're thinking about a specific investment and whether it makes sense to do it on a personal side or on an IRA side.
Very good. Let's stick with Kim one more time. Can an IRA purchase an apartment to rent to a family member?
Another good question. It depends on the family member. So earlier I talked about disqualified persons and certain relationships to you that your IRA can't do transactions with. So I'll just name off a brief list of who those disqualified persons are. You yourself personally, and then any spouse that you have, your ascendants, descendants, and their spouses. So that would include, disqualified persons would include spouse, parents, grandparents, children, grandchildren, for example. However, it does not include siblings, aunts, uncles, cousins, and then some other relationships. So if the IRA purchases an apartment and rents it out to their sister or your, cousin, then they can. But if it's a disqualified person, parents, grandparents, the things I mentioned earlier, then no, that person, not only can they not do a transaction with your IRA, but they can't directly benefit from the investment. So they can't use the property if they're a disqualified person. They can't rent it. Even if they're willing to pay rent, they are still not permitted. The IRS does not allow it. So you would have to think about the relationships. And of course, a friend wouldn't be a disqualified person, so that would be fine as well. But that's part of when we talk about education, that's part of what's helpful to know in advance before you're looking at opportunities.
Very good. Andrew Clunas, how would a self-employed person set up a self-directed IRA?
Well, as long as you qualify for a Roth IRA, whether or not you're self-employed, you could simply open it. Now, if the question is more about how do you get money into a Roth IRA, then I get that could be a little bit more involved if you're self-employed. Meaning, if you're self-employed, you may not have a 401k from, if you're not a W-2 employee, you may not have like an employer-sponsored plan. You may not even have a retirement account. So it depends on sort of what you have, and that's probably more of a one-on-one conversation to understand what the current environment is for you. But generally speaking, if you have a tax ID and you have U.S. earned income, you can open a Roth IRA. Now the question becomes, if you wanted to put in funds out of pocket, like make a contribution, there are certain limitations on how much you can contribute to a Roth depending on your income level. So that might be something to consider as well. But if you have funds in another retirement account, you can do technically what's called a conversion to a Roth conversion. And that would require you to obviously pay taxes on the amount that you're moving in up front. But once the funds are in that account, then they grow tax-free. I know there have been a lot of rumblings around some proposed tax legislation and what might be happening with Roth IRAs, but nothing has necessarily gone through yet that would be massively prohibitive. So there's still some options there, and I guess I would just wrap that by saying it's probably a good conversation to have with your tax advisor, because it's more of a question about Roth IRAs in general than it is about self-directed, because they essentially work that same way. They have all the same kind of rules and guidelines for setting it up and the tax implications.
Thank you, Britt. Kurt Smith, can you sell current investment and use funds to open an IRA?
So if you have a personal investment, I think that's what this question is asking. And Kirk, if you're there, and if I'm heading in the wrong direction, let me know if I'm misunderstanding you. But I think what the question is asking is, if you have a personal investment and you want to sell it, can you use the proceeds to put it into an IRA and get an IRA going? So the answer is yes, but you're limited to how much you can put into an IRA on an annual basis. Okay, so Kirk says yes. And you're welcome, Andrew. So you are limited to how much you can put into an IRA on an annual basis. And again, that's all dictated by the IRS. So if you're under the age of 50, typically you can put in $6,000 per year, and you may be able to deduct that on your taxes. That's more of a question for your CPA as well, but that may be a benefit of doing it. And then if you're over the age of 50, they allow you to put in an extra $1,000 each year, so you could do $7,000 a year. And if it's before the tax deadline, you can usually make a contribution for the prior year too, if you missed it. So for example, right now we're in March of 2022. So if you wanted to make a contribution for the 2021 tax year, you have technically until, I think it's April 18th this year, but whatever that tax deadline would be for you that applies, you would have until that time to make last year's contribution, and then you can also double up and make this year's. So depending on how much you want in your self-directed IRA and what you're planning on doing with it, you could get started that way. Hopefully that helps.
Yep, good. It was good. So let's go back to this anonymous attendee. If I establish a REIT with friends, which owns property. Can I invest IRA into the REIT?
So assuming you're asking about your own IRA and you're going to establish a REIT, the deeper questions become, what percentage of ownership are you going to have personally? And then what is your role with respect to the REIT? So earlier I mentioned limited partnerships, for example, and an example of how this could be restrictive is if you were going to be like a general partner, or you're going to be a managing member, and you're going to have a high level of control over this REIT on a personal side, then it's very likely that your IRA would not be allowed to invest into it. If you were going to have a minority share of ownership on the personal side in this REIT, and you weren't going to have any sort of high level, like executive level control, then there's a chance that it can. And you can probably tell I'm not giving you a definitive answer, because a lot of times it does come down to looking at the paperwork and the exact structure of the entity and the structure of the investment that's being proposed as well. So that becomes a conversation with our compliance team to dive a little deeper and find out exactly who's doing what, so that we can make that determination.
Thank you, Brittany. Let's jump on over to the chat section. Yes, you did cover our Roth IRAs. That's good. Great topic. And along these lines, with specific suggestions, do you have any specific suggestions for citizens and residents of Canada?
So we do have a few clients that are citizens of Canada. It is possible to have a self-directed IRA if you have U.S. earned income. So you don't have to reside in the United States, but you do have to have U.S. earned income. So if you work and live abroad for a U.S.-based company and you have U.S. earnings and you have a tax ID number, then you're able to do all of these things that we talked about. But those are the only two, or the high level two qualifiers that you have to meet in order to have a self-directed IRA. Otherwise, it wouldn't be an option. So it's a pretty quick one.
Good, very good. Any creative way to give an LP investors the losses or structures? Do you understand that one? Now this.
Go ahead, Anthony.
No, these were questions that were actually sent in by the attendees that may be on this line. There may not be on this line, but does that ring a bell?
Well, I think that so any creative way to give LP investors the losses. So I think it's probably more of a kind of legal question. It could also be a tax advisor question, because if I were to provide specifics, I'd be skirting the line on giving advice, and I have to be careful about that, because again, we're not fiduciaries. So I would suggest speaking to an ERISA attorney or a tax advisor. But I do see there's some other questions that were from that same individual. I can try to address.
Yeah. This may be just a ton of questions that we just took off the attendees list.
Okay.
There's another one here. I'm not sure. Wasn't there a bill pending to take away the using self-directed IRAs for the real estate investing?
So the Build Back Better Act had introduced a bill around the fall of last year that contained some modifications to IRAs. There were several provisions in that bill. There were a few that had implications potentially for self-directed IRAs. None that I'm aware of that were specific to real estate, but the biggest one that eyes were on last fall was the introduction of the possibility that if an investment required investors to be accredited only, that IRAs wouldn't be allowed to do those investments at all. And that was what was proposed, but as of now, that's been stricken from the bill. There were also a couple other potential limitations that would have affected IRAs, like being able to invest in an LLC with the IRAs owning over a certain percentage. They were potentially not going to allow that, but that was also stricken from the bill. And then there was also a mention about a cap on IRAs, and that has not gone into effect. And the cap is at somewhere around 10 million, if I'm not mistaken. So most of us probably wouldn't be affected by that. So all I can say about this is that it's important to keep up on new developments from a legislation perspective, because obviously there's a lot happening, but nothing has gone through or been enacted that would have a significant impact on self-directed IRAs.
Okay. Let's see. Are there any classes valid for Washington State realtors?
So we do host seminars on a regular basis. Depending on the organization, we could get approval for CEs, but it would have to depend on the organization. So I'd probably need a little bit more information on that. But I guess at a high level, I'd say yes, we are always happy to do educational seminars for realtors and real estate investor groups.
Okay, very good. I had heard on Bigger Pockets that there are some legislation to prohibit using self-directed IRAs in this way. Any updates? This is from Brian Silvers.
So that is similar to the question that I addressed before, I believe, related to the legislation and all the provisions that came out. So my answer would be the same on that.
Okay. My company has discounted a pension plan, and I can't touch the money unless I leave. If I leave, can I roll over the money to an SDIRA, self-directed IRA, or can rollovers be done only from the 401k?
Good question, Natoya. So yes, Natoya, you can roll over from a pension as well. It doesn't have to be a 401k. A lot of times that's just the popular term that people throw around because 401ks are the most common employer-sponsored plan. But if you have a pension, or if you have a 457, or you have a thrift savings plan, which is a lot of times military, I believe. So there are different types of names for different accounts, but essentially it just goes back to, is it an employer-sponsored plan? And like you said, most of the time, they don't allow you to touch it till you've left. But yes, that can also be rolled over. And we do have clients that have done that.
This might have been something when you were talking from Michael. Can you use an active 401k?
Oh, yeah. So the short answer is most of the time, no. But I never say never, because there are certain exceptions that certain employers may provide you that may allow for what they call in-service distributions. So some companies may allow you to take a portion of it, even though you're still working for them. So what I encourage you to do is always check with your plan administrator. So typically, like when you get that 401k statement, there's a company name on there that manages your 401k, and they'll be able to check and tell you whether it would be eligible to do that or not. So that's your best bet to find out.
Great. Thank you, Brittany. Janelle Lee, how can a self-employed person open a retirement account?
I can address that. I mentioned it a little bit, but whether it's self-directed or not, I like having this conversation with people because I feel a lot of times that self-employed persons have sort of been neglected when it comes to these conversations. And I can't tell you how many people I've spoken with that are self-employed and they have no retirement savings because they didn't know. No one really told them. There are other types of retirement accounts that you can open as a self-employed person, and that allow for you to take more money out of your personal accounts or earnings from your business, and then put them into your retirement account to start growing that value. So it really becomes a conversation about the different types of plans available for if you're self-employed. I mentioned SEP IRAs earlier. I mentioned simple IRAs, and I mentioned, solo 401ks. Those are the biggest ones. An example of what I mean by giving you more ability to put money in is on an annual basis. If you have a SEP, for example, the IRS will allow you to take 25% of your earnings from your business and put them into the SEP and make a contribution to the SEP. And that maxes out at, I don't know why I'm drawing a blank, but I believe it's $61,000 a year. I should know that. But there is a cap on how much you can do every year, but that cap is a lot higher if you have a self-employed plan than if you just have like a traditional or Roth IRA. So it's definitely a matter of just understanding. And we do have a resource on our website. We have a whole white paper on different account types. And we also have, you can navigate the website to see a quick drop down of account types and their contribution limits. So that might be a good place to start.
Like always, it's very informative, very exciting to learn this and to learn more about it, especially for us self-employed people. You know, we need all the help possible. So by all means, Brittany, I really thank you again. I know you're coming back in May for the May Expo. You want to tell us a little bit about that?
Sure. The topic is still in its development and infancy. But we are the plan for May is to explore leveraging real estate in your self-directed IRA. So today we talked about some creative ways that you can invest in real estate if you don't have available funds to buy property outright. But if you do want to buy property and you don't have sufficient cash to just purchase it outright in a self-directed IRA, there are other ways that you can. We're basically going to talk about that, specifically non-recourse loans, which are required when you are using an IRA. So you're not able to get like a conventional mortgage if you're using an IRA to buy property and need leverage. So we're going to bring on an expert that's going to talk a little bit more about that and some strategies that you can use if you're leveraging property to continue building wealth. I also did just drop a link in the chat because I mentioned a lot of different resources and ways to continue educating yourself. So that link will take you to a few different ways that you can connect with more information at your pace. And then, of course, feel free to reach out directly if you're ready to have a conversation.
Looking forward to seeing you back in May, Brittany. Okay.
Looking forward to it.
Yeah, this concludes.
Thanks everyone
everybody
for spending your time with us today. I know everybody's busy, so we appreciate it.
Yeah, definitely, everybody. Thank you for coming on at 1 o'clock and learning about self-directed IRAs with Brittany. You take care, everybody. Take care, and this concludes our webinar. Thank you, everybody.
You too. Thanks.
Bye-bye.